Hello and welcome to 2026. We're going to start the year again with full of geopolitical news. And that sounds like this year is going to be mostly led by geopolitical tensions and the news. How we started 2025 as well. Once again, Happy New Year. And for who is who didn't follow the news, I have to mention that I have to say again that this year started with two very big geopolitical news. One of them is the Venezuela and this picture. Who could imagine that we can start the 2026 with this picture and also when with this picture from Iran and to see these two countries which their governments in Iran and governments in Venezuela, they were so close together. Who could imagine that both governments going to be fall? In Venezuela, the government already fell, and Venezuelan President Maduro is already captured by U.S. armies, and now he's First Lady in the United States, waiting for uh, their future, for their fate, what's gonna happen there, no one knows. And in Iran, where as before also several times you mentioned, and as you know, one of the countries that we have a biggest gap between the people and the government, where the people are thinking totally different, and the government is Islamic government and thinks in a different way. And they had a very good relation with the Venezuela, by the way. Things started this year actually started from 2 days before the year end, from December 28th. In Iran, protests in Iran started with the people coming outside against the government, with the amazing fall, with the sharp fall that Iranian had in their currency, 1.4 million for each dollar. That's the weakest currency across the board now with this change that happened with the inflation that the government says around 42%, but official says it's which official number says around 42%, but what the people says and what we can understand from the market is more than 60 or 70%. So the inflation is high, the people are the currency is the weakest currency across the world, and that now that's the happening, that's what happening here. And Trump, which is warning Iranian government over their reaction or the kill if they kill the protests in the streets, which happened already today actually, and now we have to wait and see how the US and Israel can react to these things, that changes that are happening in Iran. That's what we started 2026, and let's see in a financial market how we ended 2025 and what happened with and what happened. Let me share my a chart and see what happened in 2025 already so far and how we ended the year. As mentioned, 2025 also started with the geopolitical tensions. That's why we always had the VIX or the market risk above 16. The risk, which was always above normal 14 and 15 area, always above 16 in April with the Israel attack with the Israel attack and the geopolitical tensions that generally we had with the war that we had between Iran and Israel. With all this, we could see that what happened there is so far with the risk that increased about 40, and then right after that, with the calming the situation, the increase slightly eased again back, but still always it was above 16. This higher risk in the market, always, which we had always during 2026, kept the risky market in demand, especially the gold, which increased rapidly in 2020 five with from 2,600 it increased about 4,000, almost 600, 4,500. So it even thought it fall slightly at the last days and ended the year at $4,230, but still the gold gained more than 60% during 2025. But the between the commodities, the silver with 100 almost 70%, 165, 70% gain was the best market gainer, or the best gain that it had the best gain across among the commodities in 2025, with ending at $72. While during the year, the silver could test the prices above $80 as well. Uh, other commodities such as the copper also, they had a very good year, but generally the silver, as we mentioned actually at the beginning of 2025, it was the best year. It could have the best year with 100 almost 70% gain. However, these tensions, one of the other reasons that increasing for the gold and silver, it was the weaker US dollar. The dollar generally in 2025 lost almost 10%, 9.5, almost 10% of its value. The value which was the dollar index, which was around 110, 111 at the first days of the first days of the US Mr. Trump presidency in the White House, ended the year under around 98. That was actually in line with the White House policies, with the higher, when we are talking about the President Trump's government, which was mostly talking about the tariffs and a trade war. So this government need to have this kind of the countries which they wanted to have the tariffs. They need to have a little bit weaker currency to be able to concur and to able to have the, to be get the stable, have the stable stable condition between the export and import, and support the export with the weaker currency that they can create. So that's why the government always tried to have the weaker US dollar, and they could manage somehow to bring the dollar index down to around 98, which was fine. I mean, a normal area for the dollar index for this condition. We talked several times about that, why with this area is fine for US economy during 2025, and that was what happened there. So with this condition that we have there, now we can see that what we can see here, that this area of the dollar index can support at the same time the gold and the gold price, then can support the silver price, could support actually the gold and silver price to gain higher in this level. At the same time, could support the US economy to have the normal import and export. That supported the GDP grow in the USA as well. And generally, we had the GDP around 4% in a third and fourth quarter. And looking at the whole year, around 1.72% GDP growth. We have to wait a little bit to have the more data, get the quarter four data, the final data for the quarter four, and then we can understand what was the exact GDP growth of 2025. Generally, we're expecting between 1.7 and 2%, around 2% actually for 2025, generally, which could be the fine growth. I mean, the stand normal growth for the US economy. Even thought in the first quarter, GDP fell by 0.5%, which had many reasons. And we talked already about that in the different videos that we had during 2025. Generally, this data and this condition supported the US stock market, and we could see that the S&P 500, which at the beginning of 2025, no one could imagine that it can increase above 6,200 or 300, ended the year at 6,860. While before that, just like several days before the year end, we had the price above 6,900 as well. So generally, the stock market especially got supported with the tech companies. AI-based companies moved the markets in 2025, and that was another reason to see some commodities like silver, like copper in a demand, because more demand for the, in the semiconductor businesses and the productions they're going to be used. That's why we had a more demand for these kind of the metals as well. Anyway, stock markets, they were positive for S&P 500, for Nasdaq, for Dow Jones, all of them, they had a very good year in 2025. The question is, will we see such a good year again in 2026 or not? That can be possible still. That still could be possible, as the reason when we are talking, you say that can still be that can still positive is because that in the last months there were a question about whether the AI investments they are profitable or not, and the condition in the market showed that yes, somehow they're profitable, even if it's not in a short term, but in a long term could be profitable. Especially the main problem, the main issue, we can say, the main concern for the AI stocks and AI generally, the AI industry is the energy. With the US taking over the Venezuela, Russia taking over the Zaporozhye atomic station, and the China with other reasons around in the Middle East with the taking a bigger, cheaper energy from the Middle East. Looking at these conditions, we can say, okay, these main economies across the world, main powers across the world, they could somehow manage to have a weaker or cheaper, actually, better say, cheaper energy, and they could how can I say between each other they could give each other to some part of the world to have the cheaper energy now there, and that can support generally these idea of the okay, somehow they are trying to manage to support the cheaper energy for the AI. That's why I don't think that we're going to have such a big problem in the finding the needed energy for the AI industry in 2026, and we can be still positive about the generally about the stock markets, even if we have some correction. But generally, we can be still a positive, about 10% gain for S&P 500, and that minimum 10% gain we can still count for. We can still count on more than 10% gain. On the other hand, for the cryptocurrency, the Bitcoin, which gained about 125,000 in 2025, ended the year very low, around around 90,000. This this just like we had too many liquidities. I mean, low liquidity in the market. I mean, the people they lost the. How can I better say? They got liquidated. I mean, they lost their liquidity and they lost their position in the option market when their options got expired at the end of the agreements that they had. Too many investors they lost their trust in the cryptocurrency market, especially when they entered not in the spot market, they entered in the option market. In the option and ETFs, somehow they could slow down the people's and investors' trust in the cryptocurrency market. That ended with the lower invests in the cryptocurrency market, especially in the ETF market and option market, and that was a negative. Bring the negative reaction to the cryptocurrency market. However, the Bitcoin could manage to around between $80,000 and $90,000 could manage a very strong base there. Sounds like that can be the base price for the Bitcoin for now, and we can see some gain above that, but not too much positive about the Bitcoin still can continue this trend. Talking about the energy, I have to say about the WTI and energy market. Generally, with during 2025, we had more export than we had more production in the energy market than market demand. Higher supply, as we had in the reports by EIA, IE, and OPEC monthly reports that we had. Always we had oversupply, and this oversupply, especially at the last months when the OPEC Plus started to recover its 2 million barrels cut that they had back in 2022. They started to recover this 2 million barrels with 137,000 barrels per day per month. And when that started from October, I think if I don't mistake, it started from October or September, October. That increased the production in the market, the supply in the market, and this oversupply put the pressure on the prices. While we had too many negative news also during 2025, especially from the manufacturing sector, where we had a lower demand for this energy, and that increased the pressure on the oil and energy prices. That was actually the higher production from United States also was another reason, as the Mr. Trump's policy is to have the cheaper energy to slow down the inflation. That's why uh, after Trump's administration, we had a higher supply and a more supply from the U.S. market and from the U.S. energy, and that's what we can probably see in 2026 with the Venezuelan oil back in the market. That's why we're not a positive about the oil, and oil generally lost the ground more than 10% in 2026, and that's expected to continue falling lower. Around $50 sounds like normal price or acceptable price for the WTI in 2026. Same condition we had for the in energy market we had for the gas price, which ended the year at around $3.50, and at the beginning of the year and slower, just like $3 to $3.40. Generally about the gas, no, we are not more negative around that. Gas price probably could recover above $3.50, and now and most probably we can have the 2026, the first quarter of 2026 around $3.50, not higher, not lower, around these areas. I movement some, I mean, a little bit higher, a little bit down, but $3.50 can be for the first quarter can be acceptable prices. With this condition, looking at the first, so since we had a charts review already, let's go and check the economic data the first week. As the first week starts in a financial market with the PMI numbers, inflation data in Eurozone and China, and also labor market data from United States, NFP numbers from United States. Those data will be the most important numbers in the data during the week. On Monday, we're gonna have Saxon PMI as of the first data. We had the first numbers to watch, Saxon PMI numbers from China. Generally, Monday we're gonna have the manufacturing PMI numbers Monday and Tuesday, and then Wednesday during the week we're gonna have the PMI numbers. What we're expecting to see, the manufacturing PMI in the most developed and developing economies, these numbers going to be for mostly for December. We're expecting slightly a little bit still weak numbers for the manufacturing sector. While the service sector, since we were getting closer actually in the December to the New Year Eve and holidays, we will probably have a little bit better service. I mean, the better data in the service sector, but the manufacturing sector still can be under pressure. Same condition we're gonna have in China, in Europe, and in the United States as well. Monday. And then on Tuesday, we're gonna have inflation numbers. Sorry, the CP, on Tuesday we're gonna have the PMI service sector as mentioned and our expectation, and we're gonna have the inflation number. We will have the inflation number from Germany. We're expecting to see the German CPI to increase by 0.3% monthly and 2.3% annually. This is almost the same condition we're gonna have probably on Wednesday for the Eurozone inflation, with the CPI monthly increasing by 0.8% and annual, but by 0.3% monthly, annually by 2.1% for the CPI, and core CPI around 2.4%. That's what we're expecting for the Eurozone, while the inflation in China, which is going to be published on Friday, expected to increase by 0.8% monthly and around 0.1 or 0.2% annually in December. However, the PPI, which is expected to fall by 1.5%, if that happened, means that China had a very big movements, very big progress from falling 2.2% to falling to 1.5% in the production sector, which can be good news for Chinese economy. However, in the United States, the market will focus on PMI on NFP numbers. Generally, we will have the export, import, housing market as well. But what the market will focus will be GLT's data on Wednesday, where the market expecting to see the GLTs. We are expecting to see 7,650,000 around this area created I mean, vacancies in November, which can be defined, which can be the positive, can be acceptable numbers showing that U.S. labor market, despite slight weakness that we had, still strong. Then continuing jobless claims would fall under 200,000 application for the first demand for the unemployment rate, unemployment benefits is expected to see around one again down, not lower than 200,000 demand, but again around 215, 216,000 again, showing that the labor market is still strong. And on Wednesday, where we're expecting to see the unemployment rate to fall to 4.5% from previous 4.6%, we also expect to see around 50,000, 60, 50, between 50 and 60,000 created job, 55 and 60,000 is the different expectations for the market. The newly created job in December. About the US data, I have to mention that January, after 2 months of having I mean, because the US government shut down during October, we didn't have a normal data during October and December, and always data they were under, even some data we missed the data, some of that even thought we had, always there was a question about that, how we can trust on them because the government was closed, the government was off, and too many data they were missing, we were missing too many numbers in the data. Anyhow, what we can see in the market right now, that the numbers that we're going to have during January from the U.S. economy will be after 2 months, will be the first complete data that we can trust on them, we can count on them. That's why the market will attach, I mean, somehow accept that more, and we can feel more comfortable with these numbers and can rely on them. Actually, we can say in a better way. That's why the NFP numbers and the numbers for December number, which going to be published this week, will be much more important to watch. Market expecting to see around 0.3% monthly and 3.6, 3.7% annually grow in the income earnings, while the unemployment rate, as mentioned, supposed to slow down to 4.5% with almost around 60,000 newly created jobs. That can be positive number for the U.S. economy, while the PMI numbers in the service sector, especially, also is expected to be positive. That's generally what we can say here, that from the U.S. economy, generally we're expecting to see the positive numbers, which can support the dollar index at the first week. That's our what happened generally in the last days of generally in 2025, and our expectation of the first week of 2026. Happy New Year one more time. Talk to you soon. Bye bye.